Hello investors, welcome to Simpli Stocks. In today's video, we are going to talk about a very interesting microcap business that has performed exceptionally well even in this tough market. The company is from the FMCG space and its name is Integrated Industries. We actually covered Integrated on our channel back in June last year. Since then, the business has done quite well, so we thought that this is the time for a follow-up to see what its future potential looks like. So today we will again deep dive into Integrated, and since this is a microcap or a penny business, we will also discuss some essential rules for microcap investing. But as a disclaimer, this video is not a buy or sell recommendation on Integrated in any way. Please keep that in mind. With that, let's begin. As I told you, Integrated is an FMCG company that manufactures and sells biscuits and cookies under the brands Rich Light, Fun Treat, and Crazy Crunch. Their business model is quite straightforward, nothing too fancy. Integrated has a plant in Neemrana, Rajasthan, with a capacity of 3,400 tons, which they acquired in 2023. Additionally, they also get biscuits manufactured through contract manufacturing at other factories. Furthermore, they are currently setting up a new 5,000 ton plant in Secunderabad of UP, which is expected to become operational by March next year. This will increase their manufacturing capacity by 2.5 times in just 1 year. So the business can grow quite fast over the next 2 to 3 years. They will have enough capacity. Integrated's distribution is concentrated in North India. They are mainly present in Uttar Pradesh, Rajasthan, Uttarakhand, Himachal Pradesh, Punjab, and Jammu and Kashmir. They have over 150 channel partners. Currently, 75% of their sales come from India and the remaining 25% share is of UAE, Kuwait, and African countries. Now, please don't make the mistake of comparing Integrated to famous biscuit brands like Good Day, Sunfeast, or Parle. You might think they are too small or they don't have that kind of brand value. But Integrated is playing a pure distribution game. Suppose if you go to a small village or a local general store, you might not find Mom's Magic or Good Day there, but you will definitely find products from a smaller brand you have never heard of. The quality and packaging might be slightly different, but retailers still stock them because they get a higher margin. Alternatively, Integrated can also make its products reach areas where Sunfeast or Good Day may not reach. Therefore, you need to evaluate Integrated from a distribution perspective and not from a brand value perspective. So as long as management keeps aggressively expanding their distribution, the earnings growth will follow. Now a humble request, if you are liking this video so far, do give me a thumbs up. Along with that, you can also subscribe to our channel Simpli Stocks. For us, your likes and subscribes are our only motivation so that we keep bringing such videos like this in the future as well. Now, moving on to the results. Integrated's performance has been very strong so far. In H1, their sales grew by 64% compared to the last year and their profit doubled. Sales have reached almost 540 crore with a net profit of 55 CR. And you will also notice margins have expanded as EBITDA margin rose from 8.9% to 10.5%. Management had estimated a minimum sales growth of 50% this year, and so far they are over-delivering. Next year, once the new plants become operational, they will be targeting 70 to 75% growth. Therefore, on such a small base, this growth is massive. I have been tracking this business for over a year now and management has consistently delivered. An interesting development in Integrated is also the entry of a DII or domestic institutional investor into the company. Their business is organized under a subsidiary named Nurturewell Foods. So Integrated is a holding company under which Nurturewell Foods operates the biscuit business. And here you can see that India Inflection Opportunity Fund IIOF has acquired a 20% stake in the subsidiary. IIOF is a late-stage hedge fund that invests in pre-IPO companies or those companies which are likely to go public in 2 to 3 years. For instance, 2 years ago, their portfolio company SAR Televenture had an SME IPO. Similarly, Vikran Engineering, which got listed some time back, has a 4% stake held by IIOF. When DIIs or FIIs enter such small businesses, it gives confidence to retail investors because these institutions invest their money only after thorough due diligence. At the time of shooting of this video, Integrated's market cap was 850 CR. Even though it has rallied, you will see this business is still trading at a PE of 11. For a high growth microcap business, this is a very low valuation. in my opinion, integrated deserves a bit more respect, a higher premium. Therefore, I would put it in both high growth and high value categories. The market is not giving it a premium valuation yet because it has not fully earned market's trust. You will see their history on screener. The business was almost non-existent in 2023 but grew very rapidly after that. As integrated spends more time in the market, builds its track record, delivers more results, the market will start to trust it and will offer a higher valuation. As we are seeing, the growth is already there. And if you compare integrated to its closest peer, Mrs. Bector's Food, it looks significantly undervalued. Usually, FMCG companies get a premium PE. Like, despite being a small cap business, Mrs. Bector is trading at a PE of 55. This is despite the fact that its growth has slowed to around 10 to 15%. Earlier, this business used to grow fast. Still, the market is giving it that high PE multiple. Similarly, in H1, you will see Mrs. Bector's had a net profit of around 67 crore with a 12.4% EBITDA margin. On the other hand, Integrated recorded a profit of 55 crore with 10.5% EBITDA margin, which is only 2% less than Bector's. So we can say that although growth can come from sales and profit growth, there is also massive scope for PE re-rating here. And we have already seen it happen in the last 1 month. Stock used to trade at a PE of 9. After the rally, it is trading at a PE of 11 or 11.5 right now. If things go well, it has the potential to trade at 20, 25 or even 30 PE. The risk you have to keep in mind here is that business is not very old. Therefore, if you are taking an interest in the business, or rather if you are taking an interest in any microcap business, then you should plan your starting allocation very, very carefully. You should not invest a lot of money in the microcap business from day one itself. For example, when I looked at Integrated 1 year ago, I only gave it an allocation of around half or 1% in my portfolio. After that, as results came, I gradually kept increasing my allocation in it. So Integrated is an emerging FMCG player that you can keep on your radar. And my humble request again, if you did not like the video earlier, please do so now, and you can also subscribe to this channel. This Integrated is a gem from microcap space, and it takes a lot of time and effort to evaluate and research about such businesses. So if you support us through your likes and subscribes, we will be able to bring more such businesses for you in the future. But anyways, I'll see you in the next video. Happy investing.